All right, let's get started. Oh, this choppy, crazy market just continues. Um, and I'm starting with the Dow here. We usually start with the S&Ps. And the Dow has been the weaker, and the Russell's been weak, of course. And so what I'm thinking here, a few things. It gets complicated when things chop like this. When it's trending, it's relatively easy. But I'm thinking that this is going to be the last chance for this market to try and hold here. And maybe it will. You know, Obviously strong buying, and we haven't gotten the signal of the strong buying yet. So maybe a little bit more downside, but maybe somewhere here, if we were to get one of these, that could be what gets things rolling. Well, as always, we're going to watch what the other markets are doing. So clearly, sellers, they took control up here. We got that reversal. We talked about this day. Some of the other markets did better. And, yesterday or day before yesterday morning, I talked about the fact that the Dow wasn't able to push that far into the red bar. And obviously, yesterday was the down day. We had that selling and things as far as the S&P and the NASDAQ. Buyers stepped up once again and pushed it back up. We'll take a look at that. And so this morning, you can see the little congestion right there. I'm going to say, just look to the left, guys. So we don't need all these drawing fib lines and trend lines and all of that hocus pocus stuff. You just simply look to the left and, just over there. Doing this for a lot of years, and I didn't say that I didn't start with the hocus pocus analysis, but eventually the realization that it doesn't work led me to the truth, which is obviously look to the left and see where the turns were before. So going into today, I'm just going to scroll this to the left a little bit here. As long as it holds this low, we're just going to be in for a boring day. So you can see the Dow is coming up toward its resistance area. We'll see where the other markets are doing. Below here, and you can see it held that support below here. The expectation would be a move, down to this level, give or take wherever, 24,800, down in the area of that prior pivot low there, because there's nothing there. There's your wide range bar, and there's your momentum move, the wide range bar, which creates the void within that time frame. So that's kind of the line in the sand for today, the pre-market low. So you need to take a note of that, because you're not going to have it anyway. Well, we can look at the spiders here. Well, we have to look at the Dow actually, right? Let's go to the Dow here. And that doesn't trade too actively pre-market. But if that's real, I don't know if it's not a bad tick. 24, let's just call it 254 and a half to 255 to be aware of that area. If the diamonds should start moving to the downside, that below that, they're going to keep going. So let's look at the S&P, and then we'll consider SPX levels today. So this is good for credit spread today. Retesting yesterday and buyers stepping up aggressively there. So this created a pivot, right? Pivot there, which gives us a reference point looking to the left where buyers stepped up before. And so the thought process is, well, buyers should step up there again. Let's see what happens. And then we, of course, we just look and to see what kind of price pattern forms down there. It's relatively simple, right? So we did that trade right yesterday afternoon in the Russell. Prices came down and started retesting, and we did that trade there into lunch. So here we have it on the 5-minute coming down, part of the retest there, and buyers step up again. What do you look for? Patterns like this. breaks to the downside, immediate reversal, consolidation, and there's there's the pop. So forming a couple of bottoming tail bars, and so let's just call it down here. You know me, I'm not so brave with these credit spreads. So I think below 30.80 should be safe today. And there you go. There's our super trader McGraw with the credit spreads. He's got 30.75. Right? Well, he's got 3100, 30.75-ish. I like 30.75-ish. So anywhere, down below here. So we've got the retest, and it was, so the thinking that, well, what if the retest doesn't hold and it goes down, and we can give it a little extra room? Well, I think that 30.80 should be okay, because it's going to have to travel from here, and I'm thinking, this is the thought process, pretty basic and simple. Well, it held down there, and now it's retracing, and why should it stop until it gets up here? Right? Give or take. Right? So we can say there's the close. If there was a line close, I know I'm kind of drawing pretty ugly lines here, but no biggie. So somewhere in here, that's where sellers will show up again, and we got then a little trading range, and we just see what the reaction is up here. So what do we want here? I'd like up above here and 3,100. Okay, so McGraw's the downside. McGraw didn't give me any numbers of his thoughts for the upside, but so I'm thinking if it comes up here, again, you have to look at SPX. It's 20. If it comes up here, well, then I look for it to stay, a call spread up above here. 30. He's saying 3,200, 3,205. Oh, really? Is this premium that far away? Let's look at SPX. Yeah. Right, so 3,200, 30, that should be fine. So the idea is, right, we've got this resistance, and prices were down, they're coming back up, up around here. Give it a little extra room. Credit spreads are the simplest things in the world. If you read a chart and just say where's support and where's resistance, give it a little extra room, and then, because they cut pretty deep when they don't work, you got to manage them. Right? You got to be willing to cut and run at certain times, like anything else. But the leverage there, you got to be a little bit more aggressive as to your management, because it hurt you real bad if they don't work. So anyway, right, down below here, up above here. Let's see what the other markets are doing. NASDAQ, you'd say, well, no big deal, nothing wrong here. This is where all the money's been flowing. Right, the FANGs and techs and the semiconductors yesterday, which was kind of a little bit of a wild ride. And, as far as the semis look so fantastic within the first 15 minutes or so, and then down everything went. And then they come all the way back after lunch, all the way back up to the highs, kind of crazy, right? JAS3 is saying to me, you must have lost a ton of money using indicators to bash them every day. Not really, Jess. I lost in my early years a ton of money without any indicators whatsoever. I was just looking to hit the ball clear over the fence and into some other ballpark. It was a void of money management that lost the money back in the day trading OEX options. So the indicator passion, if you will, came from a waste of time, which wasn't necessarily a total waste of time, because I learned a tremendous amount, and I learned that indicators were not necessary. But I did spend some years using them, trying to make money. But my early experience with zero indicators taught me the most important lesson in trading. You're an idiot to do it without a money management part of your plan. So indicators weren't what created the loss. Indicators were just a matter of frustration of why is this industry so fixated on indicators and Elliott waves and Fibonacci's, these esoteric things. And part of my passion for this is part of what I've been doing for almost, 25, 30 years of helping other people learn about the markets. And there's a whole industry out there that's leading them down a black hole. So I do my part to try and pull them out before, a lot of people that could make money doing this don't because of indicators. So now that I've given you the story there, maybe you can spread it. All right. So strong here. And where are we? Right up near the highs. Right? No big deal. Inside bar, nothing going on. And this was a red bar yesterday. It's amazing it came back and actually, turning into a bottoming tail bar. So incredible strength. Here was the wide range bar that we talked about several days ago. I said the momentum typically will stall. It has, but it hasn't broken down. So part of our factory work, all right, is to say, well, here's a topping tail bar, and it came after a wide range bar, and that suggests prices are going to go down to some pullback, not break the trend, but pullback because this was strong. It never even broke the prior day's bar. So this market, in this particular part of the market, is just so super bullish to be even where this pattern, which historically would result in some kind of, at a minimum, a break of a prior day's low and some kind of corrective price action, it couldn't even do that. And so I think it's a little bit of that irrational exuberance, famous quote from Greenspan. It definitely is. And here, just to review for everyone, that the wrong way option traders are falling all over themselves again, buying calls. And look, with this market, you can see what's happening here. You can see this going sideways. I mean, this is like anything else. Unless they're buying the right calls, they're losing money because things are not, this is going sideways and this isn't going up with any speed whatsoever. So those of you that are, experienced with options, that you could buy an option and be right on the direction, but because it creeps so slow, the time decay, you'll lose money doing it. Whereas you could buy possibly a cheap option, could be out of the money, but if things move fast, you'll make money. So this time and speed, factor is a big part of trading options. Anyway, the wrong way option traders are betting that this market is going to explode to the upside. Now, the breadth here, I look at this two ways. Well, it's coming down to a bullish level again, but the way the markets have held up here, it's pretty anemic breadth, which is really makes sense because of, we've got tech. That's really the only thing that's being bought aggressively. So coming down to this level gives me a little bit of a bullish bias. The last time it came down here, we got the rally. So here it's coming down here again. And look, if the S&Ps can clear this high, I think they could make a big move and play some catch up here. So there's a lot of things to keep an eye on, to be nimble, not become complacent ever, of course, for any reason. But this is not something that gives me comfort in thinking that the markets can go higher, but this is an opposition of that. So which kind of this to some extent neutralizes this bearish sentiment. So we'll just see which way it goes. And at some point, see that they come together because they're just not together right now. All right, let's keep going here. The Russell, right? That has been the laggard. We had a great short in this yesterday, late in the day, when I guess it was right around here, right? It was where the S&Ps were rallying, the Qs were rallying. We got that high NYSE tick, and the Russell was doing nothing but just holding steady, and it turned back, and we grabbed this thing, and was a great trade late in the day, and that didn't come back like the others did. That being said, you know, it's down here at support again, so I think we're going to be in for a little bit of a boring day, you know, for this Friday. You know, you got support. This is maybe get little blips down there. So the upside should be limited. The downside should be limited. So, you know, we'll see what stocks are in play and that are moving. Bonds, right? They're up quite a bit today, breaking out through this resistance area that was putting a lid on things there. So that means interest rates are going down, and you know, it just comes up to the next resistance area there. You know, we'll see how that deals with it. But you know, with interest rates going down, you know, I think that could put a little bit of pressure on equities. We'll see. And oil rolled over a bit yesterday. It's been struggling here, and some of the oil stocks started falling. In the ETFs, there's XLE, you know, starting to fall off the cliff there. So that could be a little bit of a bearish implications. And XLF financials, they look like they're ready to roll. So we've got a lot of moving parts here. As I said, when things are choppy and sideways, we're looking at all these moving parts to get you know, an edge as to market direction. So we'll see how it all goes. And silver, which was looking pretty good, still looks pretty darn good. Should keep going up, as well as gold. So that's where the money's flowing into, tech and gold and silver, expecting some inflation eventually, but the bond market certainly doesn't believe it. Not the Dow, bonds. And so if there's an inflation, you're gonna have bond prices going down and interest rates going up, and that's when you'll know that things are firing on all cylinders on the inflation thought. And I guess, how could there be inflation when companies are closing the doors with no work? Anyway, Dan, it's all yours, man.
All right, thanks. Alex is celebrating his anniversary. He gave you a nice compliment. Yeah, we're positioned very well. So we're short energy, we're long gold and silver stocks and ETFs. We have, you know, individual longs and shorts. Again, all our opens are fine. I'm not going to go through them unless you have a question, but I will come back to them if we get through all the gappers. Look at this, the FANG stocks. Look at Netflix gapping all-time highs, Amazon all-time highs. Look at this. Incredible strength. Just, it's amazing. BNTX, 70 bucks, or I'm sorry, 68. Top of the range here, maybe 30-minute high. I think that's a, you know, biotech. Beyond gapping down under this resistance, that is a call spread candidate. Put that in the window. FXI, just China being out of control. You know, this rally here, the government pumping them up. Yeah, we are in floor, Ken. Yeah, it's in open positions. Netflix, UAL, you know, airlines continue to be weak. A little breakout failure there. Yeah, the dog sectors that we trade when we get a setup, you know, the ones that are getting hit the worst by this. This shutdown in the economy. So restaurants, cruise ships, airlines, casinos, all week. WIMI 834, that's a big old gap. Too big for me. This one I like. Got a downgrade and it's extended. So this is a beautiful, what we call bear gap surprise. It's up multiple bars. It's gapping into the real body. Greg, you're dropped in. The real body. And, you know, we finally have an intraday setup. So this is a nice setup for both a bear call credit spread, 0 DTE, and a day trade short. That's the best thing I've seen so far here. Jason, INSU, 12. Yeah, it's a sloppy buy setup. It's worth watching. Yeah, I'll write it down. IMOS. This looks like an ADR the way it's gapping. I got no interest in that. TSM. This was a beautiful gap breakout here. I don't know why we were not on it that day. That is a gap breakout. Matex, 34 bucks. That's a bullish, very bullish gap, but nothing to do with it. It's now shocking all these bears that are down there. McGraw, McGraw mouse. Oh, maybe that's why TSM. Maybe that's why TSM is so bullish. They make the chips for that McGraw mouse. GBX bullish gap here. It's a mess, but that could be a put spread candidate. FC gapping down further, but it's already extended. Nothing to do with that. PSMT, it looks like it's gapping up. We'll come back to it. There's not enough volume. WDFC had earnings. I don't see where it's gapping. Well, it shows here down 850, but I don't see any volume, so I don't trust it. On DSS, that was a crazy movers. This was a bull island reversal yesterday, gap and crap, or pre-market. So I don't know, that could set up as a day trade short. Neo's been in action for a long time here, up again, but too extended. This was a little rocket ship yesterday. Wow. Now this, well, that was sloppy. I can't say I would have bought that. I mean, this was a buy setup, but very sloppy. TXG I like. This bullish consolidation. That's a nice chart. And also McGraw's or Jake's pizza. It's technically not a 1, 2, 3 because the tail is too big into the real body, but for me that's still fine because the bottoming tail is bullish. So that's all-time high. It's breaking out. Let's keep an eye on pizza. Norma is asking about JP Morgan. JP Morgan would have been a continuation short as a breakdown. It's a bearish engulfing that closed under this, but this morning gap puts it into question. Now you got to see how deep the gap is. Okay, the gap is still in the bottom half, but it's a bullish gap, which is a mini shock to the bears. So I don't know what to do with JP Morgan right now. As a new trade, there's nothing to do yet. I mean, this could, on the 15-minute chart, go sideways for a couple hours and break out as a day trade, as a reverse head and shoulders. Maybe it fails here and gives us a double top at resistance. So I don't know what to do with JP Morgan. Citigroup, if it can take out yesterday's low, that means then it would be negating the morning strength, and I like it. So that one is much more clear to me. Short Citigroup under yesterday's low. I like that one. EX8S, yeah, that's same kind of 1, 2, 3 looking thing. It's at resistance, but it's kind of a reverse head and shoulders. It's consolidating at resistance. Just, with the morning rally here to the breakdown area in the market, I'm not going to be doing anything at the open here. Bill, over the highs. I guess if it took out the high, it would be fine. I don't know if it will with that topping tail. Hey, Debbie. C-Day. That's bullish consolidation in the upper part of this WRB. So that one I like better. I like C-Day better than Bill. Writing that one down. Yeah, Papa India. I saw some prints up here. Yeah, we bought the afternoon high yesterday. So yeah, we're long Papa India. All right, where did I leave off here? DRI. Restaurant stock was looking weak as a possible breakdown, but it's perking for some reason pre-market. This TXG I said I like. Caldex, one of you mentioned it yesterday. Had a nice retest pattern. Here would have been your beautiful entry, like right here, and that's a 1, 2, 3 add, and its relative strength to the markets, which were selling off into the close. YouTube's asking about UAL. Yeah, I looked at this one already. We were talking about shorting it the last couple of days as day trades. Had a bearish 15-minute trend, bearish closing near the low. Gapping down and trying to churn its way back. I would say, see if it can stall here, give you a 15-minute bearish setup, and it still looks lower to me. It's in a downtrend on the daily 15-minute chart. It's a weak animal. Playing again, it looks like a toy, but the monthly looks like it's bottomed. BABA 0 DTE call spread under maybe 10-minute low. That's very possible. And then we'd be looking to sell the 270s to Ron. So yeah, keep an eye on that for us. Yeah, I have F-SLY here in this middle chart. That's one of my favorite setups so far. Here, yeah, we have, no, it's not all-time highs because look at your monthly Parham. It's not all-time highs. We're short puts on here. We're short naked $14 puts. So F-SLY, we just gotta watch it here. Wow, they suck the juice out of those the calls. Shoot, we aren't gonna get any juice. But yeah, here looks great. CYRX, that's getting on board a runaway train. It's not my style. It's It's just too extended for me. That's like, you know, buying Apple, just not my bag. Netflix.